to have applied and extends and shall be deemed always to have extended to all persons resident or non-resident, whether or not the non-resident person has a residence or place of business or business connection in India or any other presence in any manner whatsoever in India. Now what does this mean? This simply means that in Vodafone we will recall that there was a separate concurring decision of Justice Radhakrishnan. And Justice Radhakrishnan in his separate concurring decision said that if there is a transfer or if there is a transaction between two non-residents, even if the amount is chargeable to tax in India, TDS will not apply under 195. That observation is done away with because you say that even if he does not have a presence in India, it will have to be done. That was the fulcrum of the observations of Justice Radhakrishnan. The second is the decision of Supreme Court again in a case called GE India. The question before Supreme Court was very simple. I am making payment to a non-resident, but this payment to a non-resident does not constitute an income in his hands which is chargeable to tax in India. Should I still deduct tax at source in India? The Supreme Court said the language used in 195(1) starts with saying income chargeable to tax. Income chargeable to tax means if the payment does not have an income element in it which is chargeable to tax in India, then the TDS provisions do not apply. But if the TDS provisions apply and if you are of the view that you must deduct only a lower percentage or you must deduct only on part of the payment, you approach the assessing officer. This was the view of the Supreme Court. Now look at the language employed here. It says extended to all persons resident or non-resident, whether or not the non-resident has a residence or place of business or a business in India or other presence in India. Whether he has a presence in India or does not have a presence in India, I am not concerned. That means let us say there is a foreign company to whom I make payments, let's say of just commission. He does not have a presence in India. Whether or not he has a presence in India, I am required to withhold the tax. So this will probably get over the decision of GE as well without amending 195(1) by virtue of this explanation. Now department will look at it if I'm quite sure. And go a step further. This amendment is made retrospectively from 1972 onwards. You are supposed to have deducted tax even from 1972. That means at least for the years where reopening is possible or for years which are pending in litigation, you are having the threat of a 40A1 disallowance as well. You have not deducted tax at source on the bona fide belief that the income is not chargeable to tax in India and it is genuinely not chargeable to tax in India, but still you ought to have deducted by virtue of this explanation, even from 1972. From 1972 to 2012, they did not know that this is what they meant. And in 2012, they have understood what they meant in 1972 and expect that I should have understood it in 1972. I am a little dumber. That's all I can say. That's how the amendment goes. If this becomes law, again, I think it's going to lead to utter chaotic situations where 40A1 disallowance in respect of all foreign payments, whether chargeable to tax in India or not chargeable to tax in India, will be there in a big way. This is the other major amendment. The third is again a great litigation on this software as to whether it comprises royalty or is not in the nature of royalty. A beautiful argument was put forth saying software is nothing but like a book. Whether I buy Mr. Rajaratnam's book as a CD or whether I buy it as a book, what difference does it make? Merely because there is a search engine and some capabilities which the CD has, does it become royalty? I am not getting a copyright. Royalty is only what is paid for copyright. What I am getting is a right to use a copyrighted article. Brilliant arguments put forth. Ultimately, royalty definition is amended. Now saying, you always should have deducted tax at source on the software. And it is always chargeable to tax in India, royalty definition change. But then they did not have to do this at all. Anyway, the people will now have to remit by virtue of the amendment in 195. Whether or not it is chargeable to tax in India, you have to deduct. But then they were careful. Two decisions means you have to get over both, no? There is one unfortunate decision of Delhi High Court in Ericsson, which explained the law correctly. I don't want that in place. I don't want that in place, therefore I will dismantle that also. The amendment comes bringing out a very unique thing, that right to use a copyrighted article is also royalty. You have an amendment in section 2011 where they say if we make payment to a resident, and if that resident, and I have not deducted tax at source, I'm sorry, I have not deducted tax at source while making payment to a resident. That resident has paid the taxes. That resident has included the income received from me as his income. That resident has filed a return of income. Then, though I have not deducted tax at source, I am not deemed in default. I didn't need the section at all. That was there in the decision of Supreme Court in Hindustan Coca-Cola beverages, in even less with lesser rigidity, in fact. All that you needed to demonstrate in terms of the decision of Supreme Court was that the other party had paid the taxes. You did not have to show that he filed his return, you did not have to show all that also probably. The payee has paid taxes. That was all we probably had to show. Anyway, the decision of Hindustan Coca-Cola beverages itself was based on an instruction of the board only. It was not as though the Supreme Court came up with some unique concept. It was there in the board instruction, which they just lifted and said, after all, you yourself have agreed to it, why are you now questioning? Now that is being given statutory recognition on the one hand. Now a corresponding amendment is also contemplated in 40A1A, where there can be a disallowance for payments made without TDS. Where also they say, if you have complied with the conditions that are now being stipulated in 2011, there will be no disallowance under 40A1A. Now the catch is elsewhere. I think that part of 40A1A getting amended is probably one of those few assessee-friendly measures that is there through this finance bill. But the catch to my mind is, a specific amendment saying that if the payment is made to resident, and if he has complied with these conditions, means you are not an assessee in default, will automatically, to my mind, throw a signal that if it is to a non-resident, even if he has paid taxes, even if he has filed a return in India, even if he has done all of this, then I will still be an assessee deemed in default. Well, we may have to fight up to Supreme Court, and we know what is the fate of fighting. What is the fate of fighting? The advocate becomes rich. That is it. That is all that happens. So this is another amendment that they have proposed. Very major amendments are proposed in relation to transfer pricing. Transfer pricing itself is a very funny concept. In fact, I call that GP addition, not TP addition. It's nothing great. From time immemorial, we have been seeing that, your GP is lower than your neighbor's GP, so please tell me why your GP is lower. You have to explain, etc. And ultimately the assessing officer may or may not agree, some kind of an estimate via media, something. Transfer pricing is nothing but a very sophisticated form of GP. Only that we have 5 methods: the comparable uncontrolled price method, resale price method, the cost plus method, the profit split method, and the transactional net margin method. We have Rule 10B, we have the OECD guidelines, we have the UN guidelines. Now the first amendment that is proposed on transfer pricing is that it will extend to all assessees, including domestic assessees, where the payment is made to parties covered by 40A2, that is to relative or related concerns, or where the assessing officer can otherwise invoke the provisions of 80IA 8 or 10, where the assessee is claiming a deduction under 10AA, 80IA, 80IB, 80IC, 80ID or 80IE. And where, according to the assessing officer, the profit of the undertaking or the assessee, which is claiming the deduction, is higher than what would be the normal profit. In all those cases, it will have to be referred to transfer pricing officer, provided the value of transaction exceeds 5 crore. Now just imagine, making somebody understand, an ordinary assessee understand OECD, UN and all of that only means revenue to us, the chartered accountants and the advocates. It means nothing to the businessman. And ultimately you will have to say it is at arm's length. Unfortunately, my arm's length is much longer than most of the officers' arm's length. Yeah, look at my thing. can physically measure. Now what I say is that arm's length does not appear at arm's length to him. Unfortunately, they are trying to rope in, of course this was also a Supreme Court decision in GlaxoSmithKline, but Supreme Court suggested to central government that you must bring in laws for this. Wherever Supreme Court held in favor of SC, you carefully sit down and reverse. Where Supreme Court said you bring in, you brought in. It was only a suggestion. You can say it is not workable. Now it is not going to be easy to do this because this will apply to all assessments, not just corporate. See, if you look at the old, the transfer pricing provisions for international transaction, mostly it will be corporates. And you will have data available in public domain. You will have data available in public domain. Because companies will have some ROC return, some this, some that, but this will apply to everybody. Individuals, HUFs. What data will you get from public domain on what I should pay my wife for the services rendered to me? I'm talking to professionals. Otherwise at home I only get beaten up. It's the other way around. Please don't laugh at me for saying this. Is the other way around. At home we service. When she comes to work, maybe, I don't know. She claims at least. And anyway she's entitled to. How do you get data in the public domain? And what kind of data are you going to use for this transfer pricing study? That is something that defies me. It beats me. Just to say we will do this is fine. And there is something called a debt resolution panel, which is already there, for which they are giving, they are clearly announcing that we are killing it. Because just one small amendment, there is something called the dispute resolution panel, where from a TP adjustment or a foreign company case, you could go to the DRP. The DRP will decide. Against that, there is no right of appeal to department. If you have any grievance, you can go in further appeal. So one small amendment saying the CIT can direct the assessing officer to file an appeal against the DRP's order. What resolution will happen? Why should I face 3 commissioners? See, last time I went to DRP, one commissioner shouted at me, I shouted back at him. Now I felt a little bad when he shouted at me in front of